The top business stories live from the Sky newsroom. The Co-op reveals a sharp rise in crime in its stores over the last 6 months.
The reality is that every day in the Co-op, 4 of our colleagues will be attacked and a further 115 will be seriously abused.
The OECD upgrades its growth forecasts for the UK, but warns it'll have the highest inflation in the G7. Plus, why pay rises in the UK have sunk to their lowest level in more than 2 years. Hello there, very good afternoon to you. This is Business Live with me, Emma Crosby. The Co-op says crime rose sharply in its shops over the last 6 months, with 950 offences taking place every day. It says the cost of theft and fraud in its food business rose by 19% to nearly £40 million in the first half of this year alone. Well, it comes as the retailer has moved back into the black, reporting pre-tax profits of £58 million for the first 6 months of this year. That compares to a loss of £33 million a year ago. I've been speaking to the chief executive of the Co-Operative Group, Shirine Khoury-Haq.
Retail crime is an issue that we are very vocal about, not just because it isn't going away anytime soon, but due to the detrimental impact it has on the health and well-being of our colleagues. We've repeatedly stated that retail crime is in the main driven by repeat prolific offenders and organized criminal gangs. So we've spent $200 million in the past few years and an additional $18 million so far this year on extensive measures to protect our colleagues. But despite this, the reality is that every day in the Co-op, 4 of our colleagues will be attacked and a further 115 will be seriously abused. Now, having said all of that, this year's British Retail Consortium's crime report reported 16.7 million crimes from around 30,000 UK stores across retail. Co-op accounted for 8% of those stores, but only 2% of the crimes. So we know that some of that investment is paying off. And finally, I'll just say that I was very pleased to see the government's retail crime plan announcement last year and the new government support for new legislation to make abusing a shop worker a standalone offence. But we have to have that go through to law as soon as possible. And we as the Co-op are campaigning hard to make that happen, because we know that having this go into law in England will make such a significant difference for our colleagues.
And for people who are shoplifting, what do you think of them?
I'd wish they wouldn't do it, honestly, because of the impact that it has on our colleagues. You know, we see videos of our colleagues trying to deal with these professional criminals, and no one should have to put up with that as part of their day job. So I really wish that it would just stop.
Let's turn to jollier news, shall we, Shirine? Because as a company, the Co-op has swung right back into profit despite some very challenging business conditions that are out there. What's behind the turnaround?
So, and thank you very much. We're delighted to be back in the black. The results that we're announcing show that we are a strong and focused Co-op, which is delivering on our strategy for our members. So during the first half, you'll have seen that we strengthened our financial performance with increases in revenue, operating profit, and profit before tax. We continue to reduce our net debt. And while we operate in sectors that continue to be challenging, we've outperformed the market in all 3 of our business units, with group revenue up 1.5% to £5.6 billion. Now, we did all of this at the same time as investing £130 million in supporting colleagues, members and communities. So we've achieved a lot in the first half, and while there's still a lot more to do, we feel that we're in a very strong position.
You've invested £55 million in food prices. We know your food sales are up 3.2% and you're on track to get 8 million members. Tell me why this model works for you in an industry that, let's face it, is very cutthroat when it comes to trying to get the cheapest prices on the shelves for our supermarkets.
So a couple of things. We have a very clear strategy across the group for food and our business-to-business and life services businesses. And our members are absolutely at the heart of that. So as a reminder, we're a consumer cooperative. We're here to serve our members. And in what we've delivered, we were so pleased that during the year, we've grown membership by 20% to 5.5 million member owners. And we're well on track to get that to 8 million owners as well. Now, when we look at our food business, it's in a really good place because our strategy has been to focus on pure convenience. And what that has done is it's resulted in our market share growing to over 14%. And that's against the backdrop of a 4% convenience market decline, which means a 7% outperformance against the market. And we've actually doubled that outperformance since the half year. Now, what has made that up is the 55 million in prices, as you said. And because we're a member-owned organization, we spoke to our members. We know what they buy most, and we invested in the prices that are of the products that are most important to them. We've also invested in quick commerce. So we are the leader in quick commerce. We're about 25% of the market, and we're the largest grocery player on Deliveroo, Uber Eats, and Just Eats. Now, that has been really the basis of the food business's performance, the focus on membership, ensuring that we have the right stores in the right places, and then delivering through the channels that our members want us to deliver through.
Let's have a quick chat, if you don't mind, about workers' wages and workers' rights. We know there's been an awful lot of focus on the workers' rights bill, which we'll be going through in the next few months, which could involve workers, employees, having basic rights from day one. Is that a package that you support?
Look, our workers, we have 55,000 colleagues. And they are their members as well. 54,000 of our 55,000 colleagues are our member owners. So we are absolutely committed to our colleagues. We've made a commitment to pay the real living wage. We continually improve the benefits that they have available to them. When the cost of living crisis hit, we introduced our 30% discount on all of our own brand products to be able to help them through that, and that persists now. So we will absolutely always support anything that improves workers' rights.
You've had a significant increase in wage costs as you have matched the rise in the national living wage. Do you have any more room, any more bandwidth to increase those bills if the government decide to also increase again the national living wage?
We have a commitment to paying the real living wage, and we will continue to do that. So it's been £48 million increase so far this year, which will grow to £100 million by the end of the year. Look, it's tough for businesses because the cost of operations is going up. Business rates, which we've long lobbied that need reform, are, again, very expensive. It's about £111 million a year for us. They've gone up 20 million over the last couple of years. We have worked really hard over the last couple of years to ensure that we have financial stability, that our debt is low, that we're very, very strong both operationally, but also on our balance sheet. So we will continue to commit to paying the real living wage, and we'll wait to hear on about further details as they come up.
And if there was one thing that Rachel Reeves could do for you in the budget, what would it be?
I think it would be great if she would look at business rates. We look at business rates from two different perspectives because of what we are as the co-op. For us, it's not just about the cost on the P&L, which is significant, But what we're seeing on our high streets and in our communities is more and more boarded up shops because of the burden of business rates on retailers. And we don't think that that's good for society. We don't think that's good for communities. So that it absolutely does need reform, and it would be great if Rachel would look at that.
Speaking to me a short while ago. Well, let's talk about Alan Bates now, or maybe I should say Sir Alan, because he has just been knighted this afternoon. What a lovely picture that is, with his wife Susan. Now we shall call her Lady Susan. There you are at Windsor Castle, being knighted, we believe, by Princess Anne for services to justice. Of course, Sir Alan, very much a household name these days. His appearance in he inspired that very famous drama, the ITV drama, Mr. Bates versus the Post Office, and now he has received his knighthood. Well, Sky's Adele Roberts actually spoke to him not that long ago, and we'll be speaking to Adele in just a few minutes' time. So do stay tuned to hear what Sir Alan says about his new title. As we were just hearing, co-op workers have seen their pay rise to match this year's increase in the national living wage. However, new research from the human resources data and insights provider Bright Minds suggests that pay rises in the UK are actually at their lowest level since June 2022. Well, joining me now is a lady who knows an awful lot more about that. That is Sheila Atwood, Senior Content Manager, Data and HR Insights at Bright Minds. Sheila, good to have you on the programme. So for those trying to negotiate a wage hike with their bosses, are going to find it a bit tougher this year. Is that right?
That is, but I think one thing that we must do is put this in perspective of why we're suddenly at the lowest level for 2 years. We've actually been at the highest level for 30 years over the last couple of years. So since we had that record inflation levels in the early autumn of 2022, employers very quickly reacted to the cost of living crisis that their employees were seeing, and some of those high energy bills in there as well. And pay rises very quickly didn't catch up with inflation, I should be clear in saying, but we did reach a 6% pay rise as kind of the going rate last year. And that was the highest we'd seen since the early 1990s.
Very different picture, if you don't mind me jumping in, for the public sector. Of course, today, actually, just the last couple of hours, we saw the RMT being the latest union to settle their massive 2-year pay dispute with the government. Is that the right move by the government, do you think?
Well, there's a lot involved in those pay deals. So when any employer talks to the trade union, those employees are going to be thinking not just about their pay, but working conditions. And if we look at the statement from the RMT, that very much plays a part in it. And we don't have the detail of any other kind of conditions around that agreement that was put in place today or agreed today. But what we can see is that 4.5% increase across Network Rail and some of the train operators. That's not far off that 4% figure that we're seeing at the moment anyway. So for the government, we do need to be mindful of all of the strike action we've had. They've made very clear their commitment to employees and working people. So I think that agreement today does very much reflect kind of the way they're looking to move forward with employers.
But could it perhaps put any pressure on the private sector to follow suit?
I don't think so. The private sector at the moment, we have come down, and already we're seeing that when we've talked to them about what they're going to do next year, we're seeing a further fall. So we're expecting pay awards to come down to around 3% next year. They're very specific groups. The RMT and the ASLEF trade unions have a very particular way of operating. Across the private sector, I don't think we're going to see a huge pressure to go any higher. Obviously, there's lots of things at play there. Inflation is the key measure that employers use to determine pay awards, as well as affordability. Now, those OECD predictions on the economy that look a little bit brighter, that will be good news, because company performance is the key thing that's going to drag down pay awards next year. If we can get the economy working a little bit better, then that is really good news for employees of what their employer might be able to offer them over the coming 12 months.
Talking of affordability, we had Card Factory, of course, a card retailer, blaming the minimum wage for profit slumping, saying that the wage bill took 28% of their total sales. Is that the right ratio, do you think?
Well, what's interesting there is that the Low Pay Commission this year in particular has been commissioned within their remit to really look at the cost of living and try to take that into account when they're making their recommendations. Now, employers have very much done that themselves, actually, over the last few years. So they, when inflation is really high, that impacts the lowest paid more. It's a greater impact on their ability to pay. So therefore, we have seen employers already look to make larger increases. And we saw many in the end of 2022 and early 2023 giving one-off increases, some of several £1,000s to their employees. So I don't think this is something that employers are not willing to do. They very much want to look after their workers.
And in a word, are you expecting the Labour government to try and increase the national minimum wage?
I expect that the Low Pay Commission that are meeting next week, I'll be along there presenting this data to them at the same time and looking at the forecasts. I think they do have that commitment to keep to 2/3 of average earnings, so that will inevitably lead to an increase in the minimum wage and the living wage when it comes in next April.
We'll leave it there, Sheila. Thank you. Sheila Atwood from Brightmine. To some of the day's other business stories for you now. The UK economy has leapfrogged over several G7 countries in terms of growth. That's according to the Organisation for Economic Cooperation and Development, which now has the UK joint second in its forecast for the rest of the year. It's also warning, though, that Britain will have the highest inflation in the bloc. The supermarket chain Morrisons has struck a deal to unlock value from its vast property portfolio as its owners seek to further shrink the company's debt pile. Sky News has learned that the private equity-backed grocer has agreed a ground rent transaction with Song Capital, that's a real estate investor. Under the deal, Song Capital will pay £370 million for the right to receive an income stream from 75 of the chain's supermarkets for the next 45 years. Still to come today here on Business Live. We'll have a look for you at how the markets are closing up this afternoon in London and across Europe. Do stay tuned.
Big stories don't always come from big cities. I'm Lisa Dowd and I'm Sky's Midlands correspondent, and this is where I grew up. We can reveal that the driver who hit Harry Dunn is 42-year-old Anne Sakoulas.
Just met the president and we never thought we'd get this far.
This is what they're up against, that the wind is the really big problem. It is back-breaking work and the smoke is thick. It's been working well. Water levels are dropping, but no one knows what impact further rain will have. What would you do if this place wasn't open? We take you to the heart of the stories that shape our world.
It's really scary. We're terrified.
In this community, I'm told that everybody knows someone affected by COVID.
Hopefully this will be the last wave.
I never knew they would make it. It's amazing.
Change seems tantalisingly close in this corner of the UK. Wales was the first to introduce the plastic bag charge. This is my patch, my specialism. It's also my home.
Weeknights on Sky News.
This is your chance. Tell people. Welcome to the Politics Hub.
Our police force has apologised. If you want to find out about Grimsby, you come to the docks.
I'm live in Jerusalem.
Are you not concerned that that could lead to all-out war?
Hello there, good evening. There are fears of an upsurge in violence. What's at stake here?
You are watching the press preview, a first look at the front pages as they arrive.
Day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday. I'm ready. Are you? Join me, Trevor Phillips, Sunday mornings on Sky News.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better. Thank you.
Let's check in and see how the markets have fared this afternoon. This is the picture in Europe, where stocks have given back some of their earlier gains today. And on the London market, the FTSE 100 also closing lower by nearly 0.2%. In terms of standout stocks, Rentokil and the Mexican miner Fresnillo are on to the upside. Look at Rentokil, it's up nearly 4.5%. The insurer Prudential continues to struggle today, though, alongside the drinks giant Diageo, following broker concerns about trends in the US spirit sector. Both of those to the downside, particularly Prudential lower by 3.4. Outside of the FTSE, Flutter is among the biggest European winners, gaining more than 8%, following news it'll more than double its core profit by 2027. That's the tech-heavy Nasdaq for you in the United States. The bull run continuing to appear. These markets are pretty much sitting at all-time highs. The big AI chip stocks also bouncing following the Fed rate cuts and last night's Chinese surplus package. Over onto the Dow now. Intel climbing also today after it launched its new AI chip, while takeover rumours continue to swirl around that stock, higher by nearly 3.5%. And quick look at the currency for you. As you know, the pound has been doing very well against the euro and the dollar. They're both trading lower this hour. A barrel of Brent. We're also watching, of course, for geopolitical tensions, losing some of those gains made the last few days, lower by 1.6%. Let's get the views now of Anna McDonald. She is an equity analyst. Anna, welcome to the programme. And more insights today into the health of the US consumer. What have you found out?
I was looking at a story talking about the buy now, pay later market, and that's expected to grow over the holiday season by over 11%. And that's become a really popular way for consumers to pay for stocks that doesn't involve them using their debit cards or credit cards. And in fact, in some cases, they're using their credit cards to pay off their buy now, pay later expenses, which isn't actually potentially a very sensible way of doing it. Yes, it's a continued sign that the US consumer has been paying down those savings that they'd accumulated over COVID. The savings rate's getting low. They're borrowing more on credit cards, and they're borrowing more by these new buy now, pay later methods.
Interesting, because we've had some data from the US consumer from the Conference Board as well, showing in August it was the biggest drop for some 3 years, albeit that's before the big chunky rate cut that they had last week. And we're just looking at those stock markets, weren't we, sitting at all-time highs in the United States. There seems to be a big disconnect, doesn't there, between how the market is faring and how consumers are feeling. What do you make of it?
Yes, I think it is interesting. I think the Fed cut has made a difference. And I think that we now, with that latest consumer data yesterday, now traders are potentially pricing in another 50 basis point cut, which is even more than people were expecting a few weeks ago. And that does give stocks a boost. Yes, there has been a significant disconnect. Valuations are looking quite high. And what's unusual is that often when interest rates are falling, you expect the smaller companies in the market to really drive some performance because often they have more debt. But that hasn't actually been happening in this case. It's still those really strong, big stocks like those mega caps that we talk about so frequently, the Nvidias and the Apples of this world, that are really powering the market up.
So consumers, maybe not feeling great, but they still want to spend some money on holidays, don't they? Tell us about On the Beach.
Yes. On the Beach, they had a trading update today. they said that summer volumes were up 14%, and that actually the winter is looking good with more consumers demanding long-haul winter sun destinations. Bookings are looking up 34%. And they said the initial signs for next year are pretty positive as well, with summer 2025, although it's early stage, selling quite well. And that does echo again what Jet2 Holidays have been saying recently. So yes, I think there's still that desire to want to travel and go overseas.
OK, we'll leave it there. Anna, thank you so much. Anna McDonald, equity analyst, giving us her updates on what's been going on in the markets today. Well, that is it from me. I'm back again with Business Live tomorrow morning at 11:30. Let's leave you with these pictures of Sir Alan Bates. There you go, getting his knighthood at Windsor Castle from Princess Anne for services to justice. Of course, he is a household name now. He is the man and a former sub-postmaster who is a leading campaigner for victims of the post office scandal, and he has now been knighted for his just rewards. His wife, Susan, will now be called Lady Susan. We'll be getting an interview with Sir Alan and Adele Roberts, our reporter. Will be coming up in the next few minutes. We'll bring that for you as soon as we can. In the meantime, coming up at 5 o'clock, we've got the News Hour with Yanda Hakim in Beirut, Jonathan Samuels in London with the very latest on that developing story for you in the Middle East. See you tomorrow.